From the following trial balance of Mr. John, prepare trading profit and loss account for the year ending 31st December 2002. So we have the trial balance, debit, credit. The debit items are available. So we have a lot, say up to here, and we also have credit items. But here our task is only to prepare trading and profit and loss account. So there may be some items which may not be relevant from trading and profit and loss angle. So let's understand item by item. If you look at purchase, okay, it will appear on debit side of trading. Salaries and wages, your profit and loss debit. Office expense, P&L. Trading expense will be in trading. Factory expenses will be in trading debit. Carriage inwards, it will be trading debit. Return inwards is nothing but sales return, so it will be netted with sales. Discount allowed, it will appear in P&L debit. Then commission is going to be P&L debit. Stock is an asset, but we have to understand this is opening stock, because closing stock will not find place in TB because it's an adjustment item. Okay, then income tax, let's say it's a tax paid on the business income. Okay, then cash in hand is an asset. It will not find place in your trading or P&L. So that's one item which we have to exclude. Then if you look at sales, it will appear in trading credit. Return outward is nothing but purchase return, so it will be netted with purchases. Discount receipt will appear in credit of P&L. Interest received again credit of P&L, but capital will appear in liability. It will not find place in trading or P&L. Fine. So let's capture item by item. So here we have the structure: trading and profit and loss account of Mr. John for the year ending 31st December 2002. Debit, credit, everything. So let's get started with opening stock. To opening stock, what is the amount? Opening stock, do we have that? Yes, we have it here. To opening stock is 60,000. Then let's try to capture items related to trading account. We have this purchases 5,40,000. We'll have it in inner column. To purchases 5,40,000. Why inner column? Because there is a purchase written. So where is the purchase written? Here we have return outward of 12,000. So less, we'll say return outward. How much is it? 12,000. So we are going to have net purchases 5,40,000. Yeah, 5,40,000 minus 12,000, which is 5,28,000. So that is taken care. Then what are the other items? We have salaries related to P&L. Let's try to capture the item related to trading first. Office, P&L, trading expenses 8,000. So we'll say to trading expenses. To trading expenses 8,000. Then we have factory expenses 11,000. To factory expenses 11,000. Then we have carriage inwards of 8,000. So to carriage inwards of 8,000. Then we have returns inward. This is linked with sales. Okay, so we'll take care of it when we pick up sales. So we don't have other items related to trading. So going to credit side, we have sales of 10,40,000. Let's capture buy sales, which is 10,40,000 less return inwards. Less return inwards, what was the amount? Return inwards we have here 12,000, right? So it is same like this, 12,000. So what is the net sales? 10,40,000 minus 12,000, that is 10,28,000. Any other item appearing on credit? Probably we have one adjustment somewhere over here. We have closing stock that is valued at 1,35,000. So that will appear on credit of trading. So we'll say buy closing stock, which is 1,35,000. So now we'll try to see in which side we have higher total. Let me do the totaling. Probably, yeah, till here. On credit side, total is 11,63,000. On debit side, it is 6,15,000. So credit side we have higher total. So this should be totaled. Let me put it. Fine. Now we have to find out on which side, what is the balancing figure, because we know the balancing figure is on debit side. So 11,63,000 minus sum of our items, and it is 5,48,000. So this is nothing but the gross profit, right? To gross profit, say to gross profit carried on, and it is transferred to P&L account debit, right? It is transferred to profit and loss account. So we'll go to profit and loss account. We'll say by trading, or by gross profit, which is brought down, basically transferred from trading account. It is transferred from trading account, and what was the amount? It is 5,48,000. Then we'll try to capture all items related to profit and loss account. So here we have salaries and wages 3,50,000. Let's capture two salaries and wages. Two salaries and wages. How much? 3,50,000. Then we have office expenses 4,000. Two office expenses, it's 4,000. Then we have trading expenses covered, factory covered, carriage inwards, returns, everything covered. Discount allowed 4,000. So we'll say to discount allowed, it's 4,000. Then we have commission of 2,000. We'll say to commission of 2,000. Then stock we have covered. Income tax, yes, we can provide for that. To income tax, okay, assuming it's a tax on this profit, it's 40,000. Then cash in hand is an asset, it will not appear. Then here sales return outwards covered. Discount received, it can be taken to credit of P&L. So here we'll say by discount received, how much? It is 6,000. Then some interest is also received. By interest received 3,000. So by interest received, it's 3,000. So now it's time for us to find out the total and net profit. So let's do the totaling. We'll see which side we have higher total. So on credit side we have 5,57,000. On debit side we have 4 lakh. So we have to follow credit. It is 5,50,000. So on debit side there is a difference, 5,57,000 minus sum of these items. How much? 1,57,000. This 1,57,000 is nothing but net profit. So this net profit will be transferred to capital account. Okay, so in this way we have prepared the trading and profit and loss account of Mr. John for the year ending 31st December 2002. So here we have to note one or two items. If you notice, this problem has something called trading expenses and office expenses. So trading expenses will appear in trading and office expenses will appear in office account. Then this problem has this problem has an item called salaries and wages. We know wages will appear in trading account, but why we have taken salaries and wages in profit and loss account? For that, if information is available as wages and salaries, we'll take it to trading account. If it is available as salaries and wages, then we have to assume that the major portion is salary, so it will be taken to profit and loss account. Fine.